All right, we live. All right, guys, welcome again to another Sunday CBD, right? Another installment of the chart breakdown Sunday or Sunday chart breakdown, whichever one. And it's yours truly, Pips the Payout, and we also have Currency Meech as well in the meeting to present when the time comes. So, as usual, we are on we are on the XAU USD, aka gold chart, which is what I trade. So today, last week was what can I say? Last week was a bit unexpected, right? Nevertheless, we caught a lot of what was going on, right? We noticed the change. And that's the thing about the market, guys. We're able to adapt, change bias, whatever it may be, in order to, catch them pips. So basically, what we saw was what we were expecting based on the last meeting that we had was for the market to continue pushing up, and we saw where it sold off basically, and we were able to adapt to what was going on and got the selling opportunities that were presented. All right, so starting from the breakdown now, starting on the monthly time frame, we are noticing the biggest sell-off that gold has done ever, like totally, based off just last week's sales. Right? That's the most volatile gold has ever been, ever, totally. So what this tells us was we also have the same news based off what the consumer price index released is I think they raised the interest rates, right? So we're expecting gold to go up again, right? Buys until we break a certain level, in which I can show you guys on the lower time frame. We're still aiming for the overall bias to be buys, right? So let's go. We're now on the monthly, and as you can notice on the monthly, we have this big wick from the monthly candle. We only have 4 days left. While this might seem say, oh, so do even though it's a bullish candle, gold is selling off. No, it might look as weak rejection, but I'm pretty sure maybe by this week, is supposed to end. This trading week is supposed to end. Gold can cover that or at least take out most of this week, right here. We still have a lot of time, and gold is very, very volatile right now, right? Amidst the government shutdown too as well. So again, we experienced the biggest sell-off in which we have experienced. I think it was last week or week before last, just to confirm, right? To correct myself. It was last week or week before last. So we experienced a major sell-off, right? Yes, it was last week. Yeah, major sell-off last week, right? In order to in order to continue on the trend. So looking on the weekly time frame, this right here is where we see a major doji candle, wick on top side, wick bottom side, right? Forming a level of this is a major level of resistance in which the cells you could have taken cells basically. Wait, let me look at that. Yeah, in which we took cells basically, right? So looking also on the daily time frame, we also had majority of bearish candles, but again, a lot of doji, one, two, three dojis indicating indecision, right? But back to the weekly candle again, major level of resistance in which the market sold from, right? After reacting with, I think it was on the lower time frame, it was here where it respected the institutional level on the 3500, in which we have three candles that form here, indicating that this is a strong level of resistance. Okay. All right. Again, and we can notice this candle right here, which formed a bearish engulfing, taking out all of these previous bullish candles. I understand to continue the sell downwards. Again, this is the daily time frame. What we also notice right here as well is a strong daily level of resistance in which the market can come back down to and tap to continue moving off. We did have a top of this on Friday, right? Indicating bulls are coming back into the market. If we're supposed to drop down to a lower time frame, we can see it much clearer, right? Strong level of daily resistance right here, in which the market came, tried to break past, wicked off, another candle, wicked off, another candle, wicked off, another candle, wicked off. Basically, five candles right here, indicating that the market does not want to break past this level again. And continuing with the fundamentals based on CPI news, we're expecting buying pressure to kick back into the market. I think these were from last week's markup, right? In which we took sells there, uh, some minor buys right there, right? Overall, major sell off. But let's focus on what we have right here in front of us. Again, so we have a level of support right here, which has formed based on a level of rejection, right? Exhaustion, my mistake, in which the candles wicked out of this zone right here. Also, if you notice right here, we have the 4050 level of this is an indecision level as well as an institutional level in which the market is rejecting. So we can drop down to our 1 hour time frame, which is where we usually do our main analysis, which our main analysis is based on. We can draw a fib, support level to resistance in an uptrend. And we can notice here where the market is coming back to this level. What I'm hoping for is to receive my entry signal within this area right here in order to continue to take the opportunity for the buys, right? Because the market has already interacted, this was from Wednesday, has already interacted with the 78.6 level on the fib, which is also a valid PRZ, right? Again, we're not looking for sells unless the market breaks below this area right here, this entire area. Not looking for sells unless it breaks below this area. Then that shatters the overall bias of this of the buys, being that the market break below a strong support level, a strong daily level, as you can see, a strong daily level, a strong support level, and we also have all of this right here, which is supporting the selling sentiment, basically. So for this week, for today, going into tomorrow, what I'm expecting is the market to come down to this level, maybe give us a top of this, well, this right here or this down here, basically, on the psychological level. But based on the reaction, then you'll know which one of these it will top first, basically, which one it will really react off. But again, we have two areas in which the market can react off. This area, in which is basically a continuation of the move, and we have here, which is the overall point in which the market has already started moving again. So this is the higher low in which the market could continue the overall trend from here. And we also have the indecision level, strong indecision level in which the market can also come back and retest before continue pushing off to the buys to the upside. Right? First CP would be this level right here. Right? Then second TP, we basically hold it all the way up here. And then obviously third TP would be the negative 27, right? Overall, the entire move, if we're set for the buys, we have a whole lot of pips, even if we're supposed to take it off the high low point. This is already 800 pips right there. Holding it to the high point, that's over 3,000 points, right? And it doesn't have to be one strong move that you can hold after taking entry. It can be multiple moves within the same trend, within the same trade, basically. Multiple entries, multiple setups within the same trade. So yeah, that's it for me, right? And as you can see, we're already experiencing a bit of selling pressure for the market to come down, as I said, maybe retest here for buys. But we're not entering unless we get concrete buying confirmation of the lower time frame. Right? Other than that, we're watching it. If it pulls back deep in it, then we're watching how it reacts with this area as well as this area and this area. But for now, it's just a waiting game. No entries can be taken right now. So yeah, that's it for me right now. Again, just waiting on it. What we can expect is the market to pull down to, let me zoom in a bit. What we can expect is for the market to pull down, pull back into this area, or overall, just a bit lower right there, right? To continue with the overall uptrend, which we can see on the higher time frame, daily, weekly, monthly, right? And even 4 hour, if you zoom out some more. But yeah. Or you can just continue push up. Who knows? Right? But just the waiting game. We're not entering unless we get and until we get the confirmation to enter on the lower time frame, basically. But yeah. That's it for me. And at this time, I'll go ahead and hand it over to Currency Meech so that he can go ahead and do his breakdown.
Good night, good night, good night. All right. Yeah, I hear me, right, bro?
Yeah. I hear.
All right, good. So, good night, everyone. As you know, this is years 30. This is the PR trade. So, continuing from last week, as I said before, we were in an uptrend, right? And last week we had market open around this area at 30 no 46,200 and 50. So we had market open in that area, and we had a continuation of that push that started from Friday, the previous week. So what I was expecting for US 30 was a higher high to be created. So last week I said we were looking for a break of this level of resistance, which is a lower high level of resistance, to create a new high that was created on Tuesday, October 21st at the 47,000 institutional area of interest. So after that, we had a retracement to then our 46,500 area interest where we saw other confluences like the exhaustion zone and our SMAs being tapped as well as a fib, 38.2% fib. So entries that could have been taken in this area we based that off a lower time frame like the 5 minute, for example, where we saw consolidation and a breakout. So market was consolidating. We had a descending triangle pattern forming at that area of interest. We had a break of resistance here. So let me mark that off. We had a break of resistance there. We had a higher high being created, then a higher low. So even if you missed the even if you missed the first entry, you had a second opportunity to take entries there using the same stop loss, obviously, having your stop loss below your previous low point. So you're out of that fluctuation area, and your target would have been your first institutional area of interest where you pushed from. So your TP1 would have been basically at the 47,000 institutional area. TP2 is basically at the 47,500. So now, as you can see, the market gapped up to the 47,500 area of interest. So what I'm expecting for US30 is basically the continuation of the uptrend. So as you can see, based off the fib that was plotted, we have our 61.8% fib at that 48 or close to that 48,000. As I said before, when it comes on to your take profit areas, if you see that it lines up close or near to that to your areas of interest, like an exhaustion zone or an area of previous resistance, or even the institutional area, you can just target that area because it's highly probable that it's going to hit that area of interest. So now that we gapped up and we're respecting that 47,500, we don't really have a lot of data right now. We can see that, okay, the market isn't currently consolidating at that area of interest. We have a gap. So what I'll be expecting it come New York open is a fill of this gap. So I'd like to see the gap getting filled. So what we can do is plot ourselves a exhaustion area, or just mark off the gap area, extend it. Can change the color. Let's say I use yellow. So I want to see that gap getting filled and the market creating higher lows. So what we can do now is wait for the market to create that resistance area, plot ourselves a fib on the 1 hour time frame, being something like this. Look for that gap fill, wait for our confluences, wait for our confluences either at 23.6 to 38.2, even the 50%. Once we're seeing confluences in that area, you look for the entry opportunity, take the trade. Your target would be back at the 47,500, and the other take profit would be at the 48,000. So that is basically it for me this week. It's not a lot of confusion when it comes down to US30 at this moment, because as we can see, we are basically continuing that daily push as I stated. We came here, created this higher low point, higher high, created another higher low. So we're basically having that last leg of the ABCD pattern. If you don't know what an ABCD pattern is, this is an ABCD pattern. So you have ABCD. This is a push, retracement, and a continuation. So push, pullback, continuation, push, retracement, continuation. So A, B, C, D. So this is our point A. This is our point B. Our point C was here, where the market started to have that transition phase. Now we're targeting our point D. So the market hasn't created that point D area yet. That's where we're heading to now. So we have to just wait and see what happens. But as I said before, the trade is already on its way. We just need to see that resistance, that higher high resistance, another higher low, and we just continue with the trend. So that is it for me this week. As you can see, it's clear. US30 is very, very clean right now. You don't really need a lot on your charts right now to see what's happening. As you can see, A, B, C, D. As I said before, this is basically the same thing that happened on the daily, but on a lower time frame. A, B, C, D. See, we have here A, B, C, E. So we haven't really created that D point as yet, because as I said before, we need to create that area resistance, which is our bullish bearish. So we haven't gotten that bullish bearish as yet. We're waiting for that now to plot our fib. So this fib right here will be incorrect until we get that area. So once we get that area resistance, we can then plot our fib, wait on that retracement, monitor that retracement on a lower time frame. So like on the 5 minute now, we would want to see the market break some areas of support, start to retrace, start to create lower highs and lower lows, and then we would like to see indecision in the market on this lower time frame. So we would like to see either consolidation or market failing to create new lows, breaking levels of resistance, creating new higher lows on this time frame to then take or buy opportunities back up to the 47,500 or 48,000 for our overall take profit. So that is it for me this week. Very simple, very clean. And yes, I'll hand it back over to Pip to pay out. Peace.
All right. So that ends the entire meeting, guys. Thank you guys for coming. Thanks for the support. And as I said, just gotta be disciplined, wait on your setups, so on and so forth. And enjoy the rest of your week. Hope you guys make some money this week, and have a